Welcome back. We've been covering this decision by the Bank of Canada to keep interest rates on hold, and we want to get some currency reaction now. Adam Button is the chief currency analyst at ForexLive, joining us with his reaction on what we've learned this morning. Adam, what was your biggest takeaway as a currency watcher from this decision today?
In the statement itself, the comments on inflation and wage inflation were moved to the end of the statement, and that's usually a bit of a signal, and it shows some optimism that that's really happening. But at the same time, Poloz didn't give any kind of signal about what's going to happen in May.
And so he'll probably get some questions about that as this day unfolds. I'm curious to know, as more questions are being asked of Stephen Poloz today about this decision and what it means about future decisions, what would you be curious to know?
Yeah, so the Bank of Canada and Poloz himself last month was in Kingston, and he was talking about how inflation is going to filter into the economy, and he talked about capacity building, and there were some upbeat comments on that, which means companies basically investing in factories, equipment, plants. But he said we owe it to Canada to allow that expansion to continue before we essentially choke it off by raising interest rates. So how long do you want to let that run? Do you want to wait and see and let inflation run above 2% for a period before you start to choke it off? Or do you want to anticipate that inflation coming and prematurely move? And that's the same kind of question that central bankers everywhere are facing right now.
And let's put that in context on where the loonie is trading this morning. We mentioned that when the news broke, we saw the Canadian dollar weaken against the U.S. dollar, but the trend recently has been one with some momentum for the loonie, which near the end of March was trading around 76 cents against the U.S. dollar and had been making its way towards 80 cents. What does this all mean for the loonie?
Yeah, the currency market is used to so many central banks really spoon-feeding them what they're going to do next. You know, when it comes to Federal Reserve interest rate decisions, there's very little drama on decision day, whereas Poloz in Canada always has that element of uncertainty. And they are continuing to commit to that with this statement. So you have this market that bounces around a lot on economic news, and that's going to be elevated in the days ahead. On Friday, remember, we get retail sales and inflation data, and the market is really going to be looking at that closely, and we're going to see these 1-2 cent moves back and forth on that.
You know, I think it's important, since we're talking about the Canadian dollar, to also talk about the U.S. dollar, especially if we're quoting the Canadian dollar against the U.S. dollar. And Andrew McCreath was on earlier pointing out that there's been some relatively bearish sentiment around the U.S. dollar. The idea that, sure, interest rates are going up in the U.S., but maybe you're going to see more interest from the market in what Europe does with interest rates, and that's coming at the expense of the U.S. dollar. So do you have to be looking at where the greenback goes to determine where the loonie goes?
Well, absolutely. And one of the real puzzles right now is the slowdown in global growth. You know, the Bank of Canada said that they were raising their estimation for global growth, and part of that's due to U.S. tax reform. But if you look at Europe, it's been extremely disappointing over the past few months, and it was supposed to be really the leader in this charge. So there is a tremendous amount of uncertainty on global growth. U.S. growth, remember, as well, has been very disappointing to start the year, as well as Canada. So, you know, the Bank of Canada hasn't really backed away from that optimism about this global expansion, and especially U.S. expansion, but they're going to want to see evidence. And I think this decision is all about saying, all right, let's wait and see what happens between now and May, or now in July, when the subsequent meeting is.
All right, in our last 30 seconds, do you think, Adam, as a currency watcher, that the Bank of Canada will raise interest rates at its next meeting?
I think it's starting to look that way. You know, the numbers have been solid. There has been this depression in Q1 growth, but there may be some seasonal effects, and that certainly we've had a rough spring in Canada at the get-go, and I think there will start to be a turn. There'll be a turn in housing, as the Bank of Canada expects, and the Canadian dollar will probably rise in anticipation of that in the months ahead.
Okay, Adam, always good to get your perspective. Thanks so much for breaking it all down for us this morning.
Thanks, John.
Adam Button, chief currency analyst at ForexLive, with the latest on the oil story.